Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Apple is undoubtedly one of the best companies of all time, and the iPhone is one of the best products of all time. But right now, from an investment perspective, Apple has an iPhone problem. Sales of iPhones have effectively stagnated, and the company doesn't have a lot of options to increase revenue from iPhone sales without increasing prices, which may push customers to other products. So today I want to get to exactly what the numbers are, where Apple is actually growing, and why the company's price to earnings multiple might be a challenge for Apple and investors in the future. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to thank this video sponsor, The Motley Fool. Check out their top 10 stocks to buy right now at fool.com/ASYM. I've got a link below and a link in the show notes if you want to check that out. And I want to start with Apple's valuation, because I think that's an important context to what I'm going to talk about with iPhone sales and the revenue trajectory. You can see here that Apple is trading for 29 times last 12 months earnings. It's also trading for 27 times next 12-month earnings. Analysts are expecting sales to drop this year by 3%, and then they're expecting growth of 6% next year and 6% the following year. So not exactly a growth stock compared to a lot of other software companies or technology companies that you can find out there. Also not a great dividend stock. They do pay a dividend that has been growing over time, but a yield of just 0.6%. So from a valuation standpoint, it's hard to argue that Apple is a growth stock, despite the fact that it's valued like a growth stock. Now, there are reasons for that. This is one of the safer companies in the world today, generates a ton of cash. So it's the kind of company that you would expect to have a high multiple, but you are paying a premium for a company like Apple. And this is why I want to bring this up. This is a chart that shows iPhone revenue over the last 8 years. And you can see that over that period of time, the compound annual growth rate of iPhone sales was just 5.1%. And a big reason for that increase was actually price increases that have gone into effect over the last couple of years. Now, Apple is not increasing prices in the same way that it was a few years ago, but we're now at the point where the average iPhone is going to cost over $1,000. So this is a very expensive product. Once you get to that price point, if you're Apple, you run into a couple of challenges. One is that products are lasting longer. The iPhone has always been a high quality product, but if you had the first or second or third iPhone, by the time it was 2 years old, it was really time to upgrade. The technology was improving so quickly that getting that next device was really valuable. And it was really a change in the user experience if you're an iPhone user. Now, I'm a pretty avid iPhone user, and my phone is now 3 years old. There's not a lot of major changes that are happening, even with the iPhone 15. The power cord is a little bit different. The chips have gotten a little bit better. The camera's gotten a little bit better. But I get the same operating system. And for the most part, unless you're a real power user, the device is effectively the same as it was a few years ago. So this may be the time for me to upgrade, but I'm on a 3-year cycle at least right now. And not too long ago, I was on a 2-year cycle. I think a lot of people are going through that same transition. We're also seeing some of those older models or lower end models be a little bit more attractive and more attractive price points for users that are a little bit more price sensitive. Maybe you don't want to spend $1,200 on a new phone, and you get a perfectly good phone for $600, $700, $800, maybe even free depending on your carrier. So that's a challenge, is that the products are lasting longer. The iPhone is also not differentiated in the same way that it was even just a few years ago. The operating system has effectively been copied by Android, and a lot of the features that used to differentiate the iPhone are now available elsewhere. And it's pretty easy to argue that other phones have better features as far as cameras. Some of the facial recognition technology was on other phones before it was on the iPhone. So if you don't really value that ecosystem that Apple has, then maybe a different phone is going to be more attractive, especially at the price points that phones are currently selling for. So you don't have that same differentiation. I think of this as Apple is a very vertically integrated company. So if you're in the Apple ecosystem, it's going to be valuable to have an iPhone and a Mac and maybe an iPad, because they all work really well together. So now you have horizontal competition. You may use an Android operating system and a Samsung smartphone. You may use a PC or a Mac as your computer. Even software is becoming more horizontal as well. Not everything has to be on the same device, because software works across devices. So that's another challenge, is that the competition is really playing a different game than Apple is playing. And now that it's not as differentiated in certain areas that may be attractive to customers, like that camera, the iPhone maybe isn't as attractive to everybody. So that's how we get to this point where Apple is going to have fairly stagnant revenue from an iPhone perspective. And that's really the driver of the company's results. I do want to highlight a couple of other things because the company has still grown over time, but where it's growing has really changed. And what you'll notice here is that Apple is really squeezing more and more revenue out of each user. I won't show these charts, but the Mac and the iPad are fairly similar as far as a growth trajectory to the iPhone. Not a lot of growth with either of those. Where Apple has grown is with services, and you can see that the compound annual growth rate is 20% per year. So if they're not selling as many new iPhones, not gaining as many users, that means they're squeezing more and more money out of the users that they do have. And the other thing is accessories. And the accessories number is crazy because this is a business that was relatively small a decade ago. They added the Apple Watch. And then in 2016, they added the AirPods. This is one of those devices that you may want to upgrade every 1 or 2 years because you might lose a case, or the AirPods tend to be a little bit more fragile than the iPhone. I know that I have experienced that. And this is not a cheap device. So this is now a growth driver. It's a services business and these ancillary devices that are being attached. But the common theme is for both of those products, for both of those revenue sources, you have to be an Apple user with something else. So if they're not growing the user base by adding more iPhone users, then you're going to have a limit in how much more you can squeeze out of customers with some of these adjacent products. So this is the challenge, I think, for investors. This isn't necessarily bad for Apple as a business. I think they can continue to make great products, add value add products like the AirPods, like some of the services. I would be more than happy to keep buying those products. But with the current price to earnings multiple of nearly 30, investors are paying for a growth stock. And that's not necessarily what Apple is as a company. So I'm not selling shares right now, but this is definitely on my radar because Apple as a company looks very expensive compared to its growth opportunities. But what do you think about the future of Apple stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.